It's July, and we have another Austin real estate market update for you. I'm David Shapiro with my colleague Lee Abraham of the Shapiro Group here in Austin, Texas. We're a real estate team. So if you're thinking about buying, selling, investing, go ahead and reach out to us. Info is below. And this month, we have some new charts for you. We are looking at trend lines, kind of thinking like, what if the price of Austin were to have just continued the rate it was on from 2011 to 2019? Where would prices be? How far below that trend line are we? Is there still a big drop in prices to come or not? And how does that all play in? So, and some other new stats. And we got two big news items that are going to go over in the statistics that Lee's going to talk about. So let's go ahead and take a look at the stats. The number of active listings, we're up at almost 4,000 active listings for the month of July. And if we go back 2.5 years to early 2022, we're at about a 10x of the number of active listings. And it doesn't tell the whole story because we want to look at velocity. This equation of supply and demand has two sides to it. So this is the supply side. And Lee, do you want to talk a little bit about the demand side?
Yeah, so David, when we take a look at how many houses are selling, we look at the chart on the left there, we break it down over 4 time periods. The most current is the 30-day pending number, 775 pending sales in the last 30 days. And when you take a look at that, just under 4,000 active listings gives us a 5.1 month housing inventory. So in other words, it would take just over 5 months for all those listings to sell if we were selling 775 a month like we did over the last 30 days. When you take a look compared to the average over the past year, you can see it's a more robust number, although a little bit of a dip from the past 3 month average and the past 1 month closed sales. So basically we're kind of hovering in the high 700, just under 800 sales a month. And you can do the math. Right now it's about a 5 month housing inventory for single family homes in the city of Austin.
And so here's how that looks like when we chart it over 2.5 years. So, this peak seems to be pretty similar here, right around 5 months of inventory. If we're doing technical analysis, this is, a resistance line here. And so we don't really want to see us break above this. So it's something we'll be keeping an eye on.
So we take a look at the number of sales per month, and we're up year over year, which is good news, down month to month, David. And the pattern kind of is up and down. Back 2020, 21, we looked at an increase from the May to June closed numbers. Past couple years, different story, a little bit of a dip. So even when we look back at those peak number of active listings on the prior chart, the monthly housing inventory at about 5 months, seems like the timing is shifting a little bit from the true annual selling season seasonality. I don't have enough data yet to come to any kind of conclusions, but seems like the fundamentals have shifted away a little bit from some of the selling season, trends that we've grown accustomed to. So it'll be very interesting to see now as we get into the, July going forward, August into the new school year, if these numbers tick up. And I'm anticipating that that may well be the case. We'll see, but hopefully that will be the case. We would like to have more sales activity in the market.
And this is the stat that I think people are feeling the most. And so I just wanted to do a little bit of a longer term analysis and look at this in a little bit of a different way. And so I pulled these two charts and I'll explain them to you. But this is what people are feeling. The fact that there's less transactions happening. Here we have it for 3 counties, Travis, Hayes, and Williamson, which make up the majority of what people consider the Austin metro area. Over this period of 14 years, we've got 450,000 listings. And then here we have the city of Austin for that same period, about 200,000 listings. So just a little bit, half of the activity is within the city. And you can see the trend line I put here in red. It was a little bit of a more aggressive trend line towards the, moving upwards outside of just the city because there's more ability to add inventory, add new homes. And so the number of transactions was growing at a faster pace than within just the city. And you can see here, if we were to continue along this trend line, we probably should be somewhere above 40,000 transactions a year. And right now we're below 30,000. So that's more than a 25% drop off in the number of transactions in this three county area. And if you look at the city of Austin, we should be about 17,000 transactions. And it looks like we're going to do right around 10,000. So an even bigger drop off percentage wise within the city of Austin. And it's just fundamentally, I don't think anything has changed from 2020 to now in terms of what makes up the city of Austin, why it was a desirable place for people to move over all these years. These things haven't changed. Still tax free. It still has mild winters, right? The cost of living is still lower than New York, San Jose, San Francisco, Los Angeles, a lot of these places that people are moving. So I don't think the story has changed in a significant way. If anything, there's more jobs, there's more opportunities, there's new headquarters here that have been announced, and that continues to grow. The number of jobs here continues to grow. And so, what story does this tell for those of you that are thinking about, okay, what's next? Like, look at all this. This to me, this gap here is pent up demand, even bigger here within the city of Austin. People that would have been buying if interest rates had not gone up so drastically. And so, I don't think those buyers have just disappeared. Maybe they've moved to renting for longer. And so, our take is that there's a lot of pent up demand, that when interest rates do come down, these people are going to move into the market as buyers.
Right. And so totally agree with the assessment. What's the strategy? What's the plan to interpret this data and make it work for you? It's to be on the equity side in a property that's going to be attractive to that pent up demand. So breaking down where the demand has fallen off, where the upside is, those are the type of questions we like to get into with our investors, David. And it has a lot to do with, what part of the market people want to be in. But again, this is not just Austin. These numbers are reflective of what's going on around the country. So the number of sales volume, it's not like it's only dropped in Austin. It's a nationwide, trend at this point.
Mm-hmm. Yeah. I mean, I would say that the Southeast, the Southern US has definitely been hit a little bit harder. Austin has done a really good job of building. They've been a model for a lot of these cities that have talked about housing unaffordability. And Austin has done a really good job of adding housing stock, more in the apartment sector. We've added more apartments than any city, basically, except New York City, which is, crazy considering how much smaller we are than some of these peer cities like a Chicago, a Los Angeles, where we actually added more apartments than they did. So we've done a good job of keeping our affordability in line. And we've seen that with rents going down over the last 2 years. And that's been good for people wanting to move here, people wanting to stay. So that's been a positive, although it definitely hurts people that own homes. And so that's where, people that want to sell their homes, people have had this alternative of renting, which has had a lot of extra supply. But when rates come down and it helps, even out the rent versus buy calculator, it's going to push a lot of people over to buying who would love to own, and they just haven't yet because of the dynamics of the market.
So average sales price, David, we are looking at, again, a year over year increase. But we're going to have basically two big news items on this report. And this is news item number one. It's the first month for 2025 where the price hasn't gone up month over month. Each of the first 5 months of the year, average sale price of a single family home in the city of Austin has been up year over year and month over month. So we've seen ever so small of a reduction from the May number, 848,871. Now we're at 847,006. So just an interesting factoid. Looks like stability in the market. And next month we'll report again and see what it's telling us.
Last month I mentioned that we were 7% below the all-time high, which was in May of 2022 at 914,000. So we're still roughly the same amount below that all-time high. We are about 3% below the 2022 June high, and we know that the markets are seasonal, although we did have a higher number in July of 2022. So it'll be interesting what happens this next month with the average price. So, but we're not, I think that, people hear these articles and it's like, oh, Austin's down 25%. And that's just not what we've seen. Prices are down, depending on how you look at it, let's call it 7% from the all-time high. And, I've seen one-off things where people have to sell their house at a huge discount, 30% below what they paid for the same house in early 2022. So those examples do exist. One theory I've come up with, Lee, is selective sellers. If you're down 30%, you're probably not selling. If you have a job, you have a low interest rate, you're probably just waiting this out. Just the psychological pain of selling at that much of a discount is too tough. The people that are selling, they're up on their home, they're not down very much, and really there's a really strong reason that they have to move. The biggest reason I think we've seen is schools. People have kids, they want to get into a better school district, they want to get into a bigger house in the same school district, and they're willing to pay a premium for that because they love their kids and they don't want to sacrifice anything despite what's going on with their home value. So I think that's been the strongest motivator that we've seen for buyers. And of course, there's always the moved out of state and other reasons. So I think that's my explanation for why we're only 7% down on the averages.
Yeah, well, we've talked about it in previous reports because of the number of homeowners who do have the historically low rates in place on the home. There's a significant percentage that could rent the home out as well and not sell. So, there's a variety of components to how we've gotten to the huge drop off in the number of sales. But again, on this particular slide, that downtick in volume is not being reflected on the equity side, which has been up a little bit for the balance of the year.
Days to sell. So we're up year over year. We're up month over month. Generally, well, it looks like depends on what year you're looking at. Go back to 2023, it was down from May to June. Last year was up from May to June. So we're up by roughly 5 days from May to June again this year.
Yeah.
What do you make of
Yeah,
this?
well, that's what I'm saying. The seasonality seems to be sliding a little bit. I think the impact of the school season is not as pronounced. So I don't know. I'm going to just be basically happy that we're in the mid 40s. It's a manageable number. It's kind of in alignment with where we've been the past few years. But I'm starting to see a little bit of a seasonality research report on just exactly what has been shifting.
Hmm.
This is an indicator that might fall into that category.
Yeah, so go ahead and subscribe so we can keep you updated on, seasonality, and maybe it means something for you. You're thinking about selling next year and the seasonality has shifted. Maybe the ideal time to list your home isn't what it has been in the past.
Right.
So,
Sale price, list price ratio, it's a downer. Look at all that red. Zero point 0.3, zero point 0.2, still over 97. But, this is the most subtle of all statistics. And it's down a little bit. I think that's reflective of market sentiment, David. It's been hot out there. And, so I think it's on point, but not a red flag in spite of the red arrows.
number of new listings up 2% year over year, down 20% month to month. Wow. I guess, we saw a drop off from May to June of last year as well. But, go back to previous years, 2020, obviously that was a weird time in the market. But, 2021, there was a big uptick from May to June. So is this continued as part of that seasonality storyline?
I think that it's conspiring, and what I'm, thinking here is that, the flipping side of the supply, new listings, and the timing and the planning. A lot of properties that would have begun that cycle would have been right around the election time, and so I think that this is a ripple effect as we kind of look through on some of the new listings downturn, and where we're at.
So you're saying people like you go back 6 months is probably when people were buying homes to flip That's right around the election. They were anxious. They didn't want to go into a new project. And so now here we are 6 months later, and there's less things being listed because of it.
I think that's a component.
Yeah, I like that. All right, we got the listing inventory barometer. So this is our most real-time stat. So this is something that Lee came up with that you won't see anywhere else. And we just wanted to give sellers and buyers something a little bit more real time because a lot of the statistics that we've gone over are lagging indicators. So this one is the most leading indicator. And so Lee, what are we seeing?
Well, the good news is in the red outline there on the ratio, you can see kind of a drop off compared to the prior reports that we've been doing. In other words, look at the, go ahead and click through to the next line there, and you can see the number of listings added or lost down to the double digits in the most recent week. This is the most recent data, David. So this is as of a few days ago. Demand basically in alignment with where it's been, supply kind of dropping off a little bit, creates just over 100%. That means that there were 30 more listings at the end of the week than there were at the beginning of the week. However, this is the second big news item. So the first one had to do with the month-to-month of average prices, now not going up every month. And here's the second one. We've had a huge drop of active listings as a result of expired and withdrawn listings, 206 for that 4th of July week. And so that actually gives us a net retraction at the end of the week of 176 less listings. Look at the data visualization chart to the right, and you can see the most recent week charted underneath the zero line there. Just visually a huge number. This statistic is basically telling us that supply is not running away and that's good for equity, which is where our focus is always been, supply and demand staying in balance. This number is helping keeping our inventory in balance, expired and withdrawn listings. And this is what it looks like when you actually visualize the number of new listings in blue. Look at that big drop all the way to the right. And then pending sales just kind of ticking up a little bit to meet that trend line. Those data points with the blue and the red moving in the same direction with the smallest gap is the healthiest chart that we could be looking at. So you go back a couple years to 23, and you start looking at that nice progression up and down where they were just kind of in step with each other, and then things started to get a little wild.
Yeah, I remember 2 months ago we talked about, is this trending? So if you were to end right here, like it looks like this is trending up, that's our listings, and this is trending down as our pending, but we're kind of heading back towards equilibrium. So not the first time, like it kind of feels like we maybe had that trend here, although this was maybe a little more consistent. Anyways, it's good news. We're heading in the right direction again. It's not getting out of hand like maybe it looked like it could have been 2 months ago.
Right. And back to our seasonality discussion as we begin to piece some of the puzzle pieces together. Look at that peak a few years ago. That was kind of that March timeline, wasn't it? March
Hmm.
10th, March 16th. And now look at the more current activity, which was kind of the end of March. So looks like the month of March, the Ides of March to get Shakespearean, is something that we're going to have to really keep an eye on.
Okay. All right. Next, we got the mortgage rates, and this is what everybody's waiting for. So let's see. We have much of a change here? No, not really, huh? So
No.
lots of talk about how many Fed funds rate cuts there are going to be this year, and it's just not looking like we're going to see much change in this between now and the end of the year. Maybe a little bit, but I think we're really looking at next spring, hoping for there to be a big change. Of course, we got the president yelling at the Fed chair, tweeting at him. So it seems like daily to lower the rates. So you know, there's a lot of people out there who want to see the rates get lowered. Of course, the Fed funds rate isn't a direct correlation to mortgage rates, but we're hoping that there is some sort of a reprieve in mortgage rates over the next 12 months. But we don't have a very clear line of sight to that, I would say.
Well, we did report last month that Fannie Mae revised their guidance, that their forecast does have rates dropping over the next 12 months. We'll see.
Yeah. So how much was it that they were forecasting?
I think we were looking at up to a full point down to just under 6.
Okay. Well, that would be big. That would be very helpful for the real estate market. Yeah, I looked at some stats like what percentage of people have one of these under 4% mortgages where they'd feel locked in. And my sense is we get within a point, point and a half, people are going to be much more likely to move. So we get below 6, the people that are at like 4.5, much more likely to be willing to pull the trigger on something. I think that's probably where we need to be. And every year, every month even, people are selling homes at low mortgage rates and buying new ones at higher. So every year that we go, there's less people that are locked in, and the market frees up a little bit. So a combination of time just passing, rates coming down, this market's going to feel a lot different. It's hard because we've been in this for 3 years. Sometimes I forget. I'm like, man, 3 years, right? So it just feels like it's been very anemic and a tough market for real estate. We've been in a recession in real estate for 3 years. Meanwhile, a lot of the economy's booming, especially, the tech sector is booming with AI, and real estate's in a recession. So something Kathy Wood has referred to as rolling recessions in different parts of the economy. So hopefully our time to leave our recession in real estate is not too far ahead. So you can always find us back here at realestatevideohub.com. If you have any questions, go ahead and comment below. If you got a lot out of this, go ahead and share it with a friend and give us a like, and go ahead and subscribe. And we'll see you next month here on our market updates. Thanks for joining us, everybody.
Thanks, everybody.